Did you know that some of the biggest fortunes in history were made during times of war? It might sound shocking, but conflict doesn't just reshape borders. It reshapes wealth, and smart investors understand exactly how to navigate these turbulent times. In this video, you're going to uncover the hidden connections between war, economic upheaval, and massive investment opportunities. We'll explore historical insights that reveal precisely how savvy investors not only protect their wealth during conflicts, but actually multiply it, often dramatically. Let's start by addressing an uncomfortable but important truth. Wars, despite their devastation, have historically triggered profound and lasting economic changes. For example, World War II completely transformed global economies, paving the way for the United States to emerge as a dominant financial superpower. Investors who quickly recognize sectors like manufacturing, infrastructure, and technology, industries essential for wartime production, experience staggering gains. But here's something most people overlook entirely. Conflicts typically drive governments to significantly increase spending, fueling rapid industrial expansion in critical areas like defense, aerospace, and technology. Take the Cold War era, for instance. Investors who backed technology and defense giants like Lockheed Martin, Boeing, and Raytheon didn't just see modest returns, they built generational wealth through explosive growth, dividends, and massive capital appreciation. What's even more fascinating is the economic ripple effect that emerges once conflicts end. Post-war periods frequently ignite extensive reconstruction and innovation booms, reshaping entire industries and opening vast new markets. Consider Germany and Japan after World War II. Nations left in ruin yet transformed within decades into thriving economic powerhouses. Investors who anticipated these reconstruction booms captured incredible opportunities in sectors such as construction, automotive, technology, and manufacturing, generating fortunes from the ashes of conflict. Stay tuned because by the end of this video, I'll share exactly which sectors are likely to thrive in today's geopolitical climate, helping you seize what could be one of the greatest investing opportunities of your lifetime. To truly understand how wars reshape wealth, we need to explore one powerful yet subtle dynamic: inflation. Wars are notoriously expensive, often financed through enormous government borrowing and increased money printing. This can lead to rapid inflation, significantly altering investment landscapes. Take the Vietnam War era as a clear example. As government spending surged, inflation in the United States skyrocketed, peaking in double digits during the 1970s. Investors who held onto traditional bonds and cash saw their wealth erode rapidly. Yet, those who anticipated inflation's impact and invested in tangible assets like gold, real estate, and commodities not only preserved their purchasing power, but significantly increased their net worth. And here's a lesson from recent history: the Iraq War in the early 2000s. This conflict saw defense and technology contractors' stock prices soar. Companies like Halliburton and Northrop Grumman saw their shares rise sharply as billions of dollars flowed into defense and reconstruction contracts. Investors who were attuned to these market dynamics captured substantial profits. Another overlooked aspect is how conflicts influence global supply chains, creating scarcity in critical resources like oil, gas, and precious metals. This disruption often leads to price spikes, creating short-term, high-yield opportunities. For instance, during the Gulf War, oil prices briefly doubled, generating massive profits for investors positioned in energy sectors and commodities futures. But wars don't just reshape markets, they reshape currencies too. Conflicts frequently undermine trust in affected nations' currencies, causing investors to seek safe havens like the US dollar or Swiss franc. For example, during conflicts in the Middle East or geopolitical crises involving Russia, the US dollar often strengthens dramatically, benefiting investors holding dollar-denominated assets. In a moment, I'll explain how you can strategically position your portfolio right now, considering the current geopolitical tensions, to ensure your investments don't just survive, but thrive. Keep watching, because knowing these strategies could dramatically impact your financial future. Understanding how conflict shapes wealth isn't just about looking to the past. It's crucial for navigating today's increasingly uncertain world. Right now, geopolitical tensions are on the rise globally, from the Middle East to Eastern Europe and the Asia-Pacific region. Smart investors are already paying close attention, carefully adjusting their strategies to prepare for potential volatility and capitalizing on emerging opportunities. Let's break down exactly how you can strategically position yourself to thrive, even in uncertain times. First, recognize the sectors that tend to benefit when tensions escalate. Defense, cybersecurity, energy, commodities, and even certain technology sectors. For instance, during recent conflicts, cybersecurity firms experienced tremendous growth as threats increased and governments ramped up spending to protect critical infrastructure. Companies specializing in digital defense like CrowdStrike and Palo Alto Networks have seen their valuations surge, turning early investors into big winners. Energy markets are another vital area impacted by geopolitical instability. When conflicts arise, particularly in regions rich in natural resources like oil or gas, the immediate effect is often sharp price volatility. Just look at what happened after Russia's invasion of Ukraine in 2022. Energy prices spiked dramatically, rewarding investors who were positioned in commodities or energy-focused ETFs. Understanding these dynamics allows you to anticipate similar scenarios and position yourself accordingly, ensuring that volatility becomes your ally rather than your enemy. Additionally, consider commodities such as gold and silver. Historically viewed as safe haven assets, these precious metals often gain substantial value during times of global instability. Investors flock to gold, seeking a store of value that remains stable when currencies and traditional financial markets falter. During periods like the financial crisis of 2008 or geopolitical turmoil involving major powers, gold prices consistently rose, providing solid returns for investors who included it strategically in their portfolios. But let's go beyond just picking sectors. How you invest matters greatly. Diversification is key, but during periods of heightened geopolitical risk, strategic concentration in sectors proven resilient or poised to benefit from instability can significantly boost returns. A careful blend of diversified ETFs, commodities, and selective stocks allows investors to manage risk effectively while maximizing potential gains from rapidly changing market conditions. Finally, don't underestimate the power of timing. While no one can predict exactly when conflicts will escalate or resolve, staying informed about geopolitical developments can give you a crucial advantage. Monitoring international news and expert analysis enables you to act decisively when the market reacts emotionally, providing opportunities to buy valuable assets at discounted prices or to sell and lock in profits when optimism returns prematurely. In just a moment, I'll share some actionable investment insights tailored specifically to today's geopolitical climate. If you've been waiting for the right moment to adjust your investment strategy, you'll want to stay tuned, because the upcoming tips could make a huge difference in your financial journey. So, how can you practically apply all this knowledge to your investment strategy today? Let's dive into some actionable steps you can take right now to leverage current geopolitical tensions and safeguard your financial future. First, consider adding defense and cybersecurity ETFs or stocks to your portfolio. Companies like Lockheed Martin, Raytheon Technologies, or cybersecurity leaders such as CrowdStrike have historically thrived during uncertain geopolitical climates. Allocating even a small percentage of your investments to these sectors can provide solid returns and crucial diversification during turbulent times. Next, evaluate your exposure to commodities, particularly energy and precious metals. Including commodities ETFs, such as those tracking oil, natural gas, gold, or silver, could protect your portfolio from inflationary pressures and currency fluctuations. If tensions escalate further, commodities may provide a valuable hedge, maintaining your purchasing power and enhancing overall portfolio performance. Additionally, don't neglect currency considerations. Holding assets denominated in traditionally strong currencies like the US dollar or Swiss franc can shield you from volatility in emerging markets or currencies vulnerable to geopolitical stress. Diversifying globally, not just by asset type but also geographically, will greatly reduce your risk profile. Timing matters, but remember, no one can predict geopolitical events perfectly. Rather than attempting to time the market exactly, develop a disciplined strategy to consistently monitor global events and be ready to adjust your portfolio strategically. Set aside cash or liquid assets to swiftly capitalize on temporary market panics, buying quality assets at discounted prices when others panic sell. Finally, always prioritize education and ongoing research. Understanding the hidden relationship between conflict and wealth creation empowers you to spot opportunities before the broader market does. Stay informed through reputable financial news, geopolitical analysis, and economic forecasts, positioning yourself ahead of the crowd. If you found this valuable, don't forget to like and subscribe for more insights that can transform your investment strategy. And I'd love to hear from you. Drop a comment below, letting me know what investment topics you want covered next. The sooner you understand these dynamics, the sooner you can grow and protect your wealth in these uncertain times.